China is the world's factory. It makes everything from cars to smartphones, machinery, and iron. This gives China the largest economy in the world in purchasing power, parity terms, worth $40.7 trillion. In nominal terms, it's the second largest, with a GDP of $19.2 trillion. But trouble is ahead for China. Its traditional growth engine of manufacturing isn't working anymore. Manufacturers are moving out and China's exports are suffering. It leaves China scrambling to find alternatives, to prevent stagnation or decline. And as you'll soon see in this video, it might not work out. This is a big problem for the CCP, because, as you may already know, no company is truly private in China. The CCP has their hands in every jar. That means when we buy Chinese-made products, we are basically giving money to the CCP that Xi Jinping then uses to bully the world. Now, I know that if you are watching this video, you are not someone who is happy with the CCP getting your hard-earned money, but it's happening, and it's not your fault. You see, on sites like Amazon, it's nearly impossible to find which product is from China because Amazon doesn't want to disclose that kind of information. Now, I asked Amazon if there's any way they can add this feature, but I didn't get a reply. So, we created a solution to this problem ourselves. We made an extension, Shops Safe, that shows you exactly where any Amazon product is from. So, you can now make an informed decision as to what to buy or what not to buy. Unfortunately, for right now, it only works on around 70% of products on the site. But, we're working non-stop to make sure it works on everything soon. And on top of this, the extension is completely free, and there's no way for us to make any money from it. We don't want to make money from it. Our goal is just to get big enough that Amazon listens to us and adds this feature to their product pages. My thinking is that Amazon may not listen to me, but maybe they'll listen to all of us. So, you can go and download the extension right now by using the link in the description or using this QR code that's on the screen. Use it. Leave a review so more people find it. Then hopefully, Amazon sees this and adds a feature to their site, and we can all just delete the extension. First, let's back up a little bit and try to understand how China got so good at manufacturing, not only because this story is so incredible, but because it also helps us explain why China today is very different from the China of 50 years ago. In terms of manufacturing potential, back in 1978, Deng Xiaoping rose to power as the paramount leader in China after decades of Mao Zedong. He initiated the reform and opening up policies which transformed the entire country. At the time, China was a backwards country with not a lot of industry to speak of and not a lot of prosperity for its people. And really, that's an understatement, because just 2 decades prior, millions of people starved to death during the Great Chinese Famine owing to Mao's disastrous policies. Deng Xiaoping had the courage to look beyond old-school communism and Maoism, owing it to the fact that he was purged twice by Mao during the Cultural Revolution. He strongly believed that China should copy some of the West's ideas. This included free markets, international trade, and an entrepreneurial spirit. He couldn't call this capitalism, though, due to China's historical sensitivities. Instead, he called it a socialist market economy and socialism with Chinese characteristics. To start, Deng Xiaoping pushed for a special economic zone along China's southeastern coast where foreign businesses could invest and operate on a free market basis. Not long after, these special economic zones gave rise to some of the most successful manufacturing hubs in human history. Now, at the time, China had a pretty close relationship with the US and the West. In 1979, Deng Xiaoping made an unprecedented step to visit the US. And that's why we have a legendary photo of a Chinese communist leader at a Texas rodeo. He was also spending his time on more serious stuff like touring US factories and meeting with American business leaders. He was doing the same with Japan with 2 unprecedented visits to Tokyo in 1978 and 1979. He bridged a huge gap created by the Japanese invasion of China in the Second World War. It allowed China to connect with Japanese businessmen whom were some of the most successful in the world at the time. Also, we should remember that this was happening right in the middle of the Cold War. China did not like the Soviet Union at this time because of Soviet imperialism. Ironic, and the threat on its northern border. The US, Japan, and Europe also didn't like the Soviets. That's why they were happy to support China with investments in trade as an anti-seat play. The support from other nations was crucial in making China the manufacturing hub of the world. The fact that China could become very powerful one day and start a new Cold War was not really on anybody's mind as of yet. What was on everyone's mind, however, was the kind of money you could make in China. Suddenly, this massive country opened up to world trade. And at the time, in 1980, China was by far the most populous country in the world, with nearly 1 billion people. The labor costs were barely anything for Western standards, with manufacturers paying a few cents per hour. And everyone knew that once China grew its economy, it would become one of the biggest sales markets in the world. That's why all the big players at the time, including most American businesses, moved in. At first, they did this slowly and cautiously. But after China joined the World Trade Organization in 2001, business went on outsourcing to China. And by businesses, I mean pretty much all the businesses that manufacture anything in electronics and tech. China took over everything from making smartphones, laptops, PCs, televisions, washing machines, batteries, lighting, and so on. It also took over much of the clothing and apparel, shoes, and home textile industries. And even the most basic materials like steel, aluminum, and cement are mostly made in China nowadays. The same goes for chemicals, including plastics and pharmaceuticals. China is also moving into industrial machinery and tools, and they're the world's leading car manufacturer now. The effect was predictable, but also stunning. China's GDP went parabolic, going from $1.40 for trillion at the time of joining the WTO to nearly $19 trillion now. On the world stage, China wasn't playing on the sidelines anymore. It became the chief rival to the US and a contender for a global superpower status. Former Secretary of State Antony Blinken called China the biggest geopolitical test of the 21st century. Through the Bari Investment Project, China started to use its money from exports to gain influence all over the world. China is also using its resources to fund a massive military expansion that's threatening to disrupt the balance of power in Asia. If trends continue, China could very well become the world's most powerful country in just a couple of decades. But that's a big if, because in 2025, it's not all that rosy anymore for China. Manufacturing, which has been the backbone of its rise, is halting. Where China's manufacturing industry as a percent of GDP used to be at 32% in 2011, it's rapidly declining and down to 25% of GDP now. Growth in manufacturing has been stagnating ever since 2021 due to the effects of the pandemic and the trade war, and the downturn is far from over. But recently growth in factory output has hit an 8-month low. But the worst thing of all is that the Chinese economy is in a very big bubble. The Chinese economy and manufacturing sector is kept alive by an increasing amount of debt. We're talking about trillions of dollars. This debt situation is turning into a major problem. And once it breaks down, we could see a collapse of Chinese manufacturing dominance. We'll cover all of this later. But first of all, we have to start at the very basic economics of the Chinese manufacturing operation, because that's where it starts to go wrong. Chinese manufacturing relies on having the most and the cheapest labor. That was the case in 1979 when the reform started, and it was the case when China joined the WTO in 2001, but it's not the case anymore. Just look at this chart showing the average yearly wages people earn in Chinese manufacturing. In 2013, they earned 46,000 Chinese yuan. Decade later, it more than doubled to $108,000 Chinese yuan. Now, that's still only about $15,000 and way lower than the US, but it's clearly not as cheap as it used to be. And there are other countries out there with wages of only a couple thousand, significantly undercutting China. Meanwhile, China doesn't even have the most people anymore. India has overtaken China as the most populous country in the world. But it's not just that. China's population is rapidly aging, with the median age already nearly 40 years old. This means that a large and growing part of the population is retiring and not able to work in factories anymore. There are already 22.5 retirees for every 100 working-age people in China. This is called the old age dependency ratio. By 2050, this could rise to 51 retirees for every 100 working-age people, according to the UN. That's really bad for the economy, especially because the population is also declining at an alarming rate. Last year, China lost 1.39 million people due to low birth rates, and this is only accelerating. This is already having effects on manufacturing. 3 years ago, a survey done in China reported that 80% of manufacturers faced labor shortages, ranging from 10 to 30% of the workforce they needed. And according to the Ministry of Human Resources and Social Security, the total labor shortage could rise to 30 million people this year.